All right. So good evening, everyone. Welcome, Dallas AFTA Group. Thank you for being here tonight. I truly appreciate it. Mary asked me about doing this, and I don't know. I always feel honored to be able to do that, do something like this with you guys. So I truly appreciate it. You guys have any questions before we get started? We do have some folks here from Hit and Run Candlesticks Right Way Options membership. If you guys are here, say hi. Say hi to all the Dallas folks. They are diehards. They listen to me day after day after day. Hey, Chuck. And you would think their ears would be bleeding. Thanks for being here, guys. I really appreciate it. How about we kick this recording off and get things going? So good evening, everyone. Thanks for being here once again. We're going to just jump right in to some ideas that may help you with your planning so that you can have a better year in trading. How many here are a little bit frustrated with your trading, that you're just not getting the results you want, that you might be a little bit Tammy's not? Well, that's good, Tammy. Might be a little bit frustrated with your trading, might be a little bit or struggling with your trading. And what we're going to talk about tonight is some things that I do to plan trades, to be a little bit more precise. And it's what's been able to provide me the ability to trade full time for a living. And having done that for more than 15 years now, hopefully I have a little bit of information I can impart to you guys that might help you out. So first off, let's just jump straight to chart. Start looking at some charts and maybe how I might go about setting up a potential trade and the kind of planning that I do. Now, first off, one of the things we have to do when we think about planning a trade is we want to think about what we're trying to achieve. Okay. What is your risk tolerance for a trade? Does anyone have any confused by that? How to set up a trade, how to really think about your trading plan? Well, one of the things I do is I talk to people. I do a lot of individual coaching with folks all over the United States and several countries, helping people get their trading on track. And one of the things we talk about all the time when I'm working with people is we talk about the idea of understanding your risk and understanding what you're here to achieve. Okay. Now, understanding risk comes into play. How many in here would say, hey, I can risk $300 on a trade? Anybody here? You can risk $300 on a trade. So on a $300 trade, and you're okay with that stop loss, we want to test this just a little bit and make sure that's actually your tolerance for risk. So Tammy, I would ask you, how many trades do you normally hold at one time? Only one at a time. Okay. Do you find that you struggle with just one at a time? Because oftentimes people trading just one at a time rarely have enough going in the market that they can make consistent money. Okay, because you have to be exactly right all the time. And rarely are we exactly right all of the time holding just a single trade. Now, perhaps you're day trading, maybe you do something different. I don't know. But it's rare when I find someone that says I only hold one trade at a time and I do well in my trading. Okay. Now, most people are going to tell me somewhere along the lines, I can hold 4, 5, 7, 10 trades at a time. Well, let's say, for example, if we could hold 5 trades at a time times 300, how many of you are willing on a one-day really bad reversal in the market? How many of you are willing to lose that much money in one day? A $1,500 loss. It'd be pretty devastating to a lot of folks, right? The problem is a lot of folks have never really thought about that kind of risk tolerance, where their risk tolerance really stands. They think, oh, I can lose a little bit on this trade and I'm okay. But they never really think about if I'm holding a portfolio of trades, how much risk I'm actually taking. And we know, we've certainly seen it, haven't we? If we take a look at the market, let's take a look at the diamonds. We had a day just over here where we lost 600 points in a day. We have that ability to have those really ugly losses all at once, where everything in the market kind of reverses and you could get stopped out on multiple trades. So one of the first things I try to help people understand and help them define is their actual tolerance for risk. How much can you stand? How much can you handle? And then we relate that to the overall of your account. So for example, one of the things I find when I talk to people, if we take, let's say we take that $1,500, okay, and we divide our account into that $1,500, I find for the most part, if we have folks that are only have a risk tolerance of 2% or less, they have a very, very difficult time making money in the market. They're not putting enough money out there to be able to ever come close to making a living in trading. Okay, so 2% of their account at risk at any one time makes it very, very difficult. They're not holding enough trades. They're not giving themselves enough opportunities. Okay. On the other hand, if I find that this $1,500 risk is actually risking more than about 5%, these are the folks that are stretching themselves a little bit too aggressively. And they always seem to find themselves being uncomfortable in the market if they risk a full 5% of their overall account at any one time, particularly in short-term trading. Now, by the way, I'm talking about short-term trading, and I'm talking about options trading specifically. Okay? So when we push ourselves beyond our comfort zone, anyone in here ever feel the sense that you're just kind of always racing around and out of control? You guys are a quiet group. Tammy says yes. A little bit out of control, allowing those emotions to get into place. Well, by defining our risk, can you guys see when we start to define our risk, we start to make some understanding of where we are in the market and how much we can risk, how much is acceptable for us. And I usually find a lot of people feel pretty comfortable in that 3 to 3.5% range. Okay. If they're in that range, let's say you have a $30,000 account, you have a $200 risk tolerance, you'd have 5 trades at a time that you can take. That's going to be $1,000 in one day that if the market reverses, you could potentially lose. That is only 3% of that account. Now, if you lose $1,000 out of $30,000 account, do you guys think that you can recover that? And see, here's one of the things. People put themselves in a situation where they don't put enough money into trades. They don't understand their tolerance to risk. Okay. And consequently, they're always out of balance. Okay. So one of the things I do is in my trade planning, I know what kind of tolerance for risk that I have. As a matter of fact, I go one step further, and every Sunday I fill out a new sheet of paper. Let me show you what that is. Whoops, wrong one. Let me pull this up. I fill out a sheet of paper. This is part of my preparation for the week. I fill out, I know what my annual goal is, my monthly goal, and my weekly goal, my average trade size, how much I can risk per trade, and my tolerance for risk per trade. This prevents me from over trading, under trading, being out of control. I actually have a plan that keeps me focused into the job of trading. Okay? I know how to size my trades. I know how to plan my trades very, very carefully. Okay? So I want to encourage everyone to understand your risk tolerance. Second thing, really quick, is we need to understand what we're here to do, our goals. I ask a lot of people if anybody here with a rather small account, and don't be shy. I mean, nobody's going to judge anyone. Trading a rather small account, and okay, Cody, and you might be struggling with that small account just a little bit because we have never really thought about what we're trying to achieve. Let me ask you this, Cody. If you made $50 a week, every week, okay? So 50 times 4 times 12. Would $2,400 make a big difference to your account? If you grew your account by $2,400 this year, would that make a big difference? Okay. Now let me ask you the hard question, Cody. How many times have you had $50 profits and didn't take it? In fact, how many times, if you'd have just taken the profit, how much further along your account might be than where it is right now? And this is where we get into that situation. We don't think about what our goals are. What are we trying to achieve? Would everyone here agree that have you ever heard of any money manager out there in the world that consistently makes 20% per year on their account? Anybody? The reason you don't, guys, is because if people made 20%, if there was a money manager that actually made 20% a year and could prove that consistently, I wouldn't trade anymore. Why would I want to go to work every day and work hard if somebody can double my money with 20%, they're going to double my money every 3.5 years. Why would I even, if they can prove that, everybody in the world would go to that person. Okay. The fact of the matter is not many people can do that. Okay. And do it year over year over year. So the reason I do that is I use 20% is just an idea to get you started with. You can certainly earn way more than this. Let me tell you a story of a good friend of mine. Lives here in my little town. His name's Mike Peterson. Started with a $20,000 account. So working through the plan process of what we were trying to do, he had a maximum trade size that he could use $600 to $800 per trade. That was his maximum trade size. His goal was to achieve a 20% return on the year. Okay, so he had profits that he needed to take consistently. By the way, guys, this is really important. If you ever want to be a full-time trader, if you want to make a living at this full-time, you have to get comfortable with taking profits consistently. Because the only way I know to do it is you've got bills coming every month. Trust me on this. If I don't make the bills, after a certain period of time, my wife is going to tell me, okay, pal, go pick up your hammer and get back to work. Because this isn't working. Our bills come every month. We have to figure out a way to be consistent. We all have a certain number we need to cover every month. Is that true, guys? We all have a certain number. If we want to be full-time, we need to cover. So we want to think about what those results would look like. And the reason I do that, guys, you can make more than this. But the reason I do that is to remind myself what I'm here to do. Once again, every single week, I fill out one of these. I know what I'm here to do this week, what my job is. It keeps me focused into what my job is. Okay? Because we've all had those periods of time where we've been up a lot of money and then lose it all. Right? The very next trade. I like to tell people I'm only as good as my next trade. And if I'm not focused into my plan, what I'm trying to do, I will oftentimes regress and make a mistake and yo-yo my account. And one of my first training classes I ever did online was Confessions of a Yo-Yo Trader. Literally, guys, my account would do this. I had moments of brilliance in the market where I just thought I had this wired. I was the king. And then the market would shift. And I would give it all back and then some. And I did this for years. Anybody experience this where they're yo-yoing their account? One of the reasons that is, guys, is because we don't have a plan and we're not following consistent rules to keep us consistent and stable, taking profits. Okay, so we want to think about what that is. Now, let me tell you what this did for my good friend, Mike Peterson, trading $600 to $800 positions. His very first year as an option trader, actually his very first year as a trader, period, he made a 65% return. And he hasn't looked back. Okay, his biggest winning trade that entire year was about $350, and it was an accident. It gapped up. And he took the profit. His average winning trade over the course of that whole year was $120. Does Mike have a plan for consistency? Yes, he still does this today. You show him a 15% or 20% return on an option trade and he's gone. In fact, don't be in his way because he will knock you over. This is a guy who's never traded and has now figured out how to make a career and is living full-time as a trader. And he averages little tiny wins over and over and over in the market. Sometimes he hits some big ones. The other day, the sell-off just the other day on Friday, he reported 2 trades, made $1,000. That's consistency. That's what we all want to achieve in our trading, right? So that we can prove to ourselves that we can do this full time. So let's go one step further here. Let's talk about how we set up a trade and how we can maintain some consistency. And I'm going to show you a trade that I think is potentially setting up. And let's just work through the process and see what it looks like to you. Take a look at Allstate. Anybody like that chart? And by the way, this is how I look at my charts. I don't use any indicators. I just follow price action. Okay. Actually, I put some drawings on the chart, and right there you can see is my alert. Now, what I do differently than a lot of other people is most people are chasing. How many of you have scans that you're looking for this white candle today? And how many times when you're looking for that white candle, by the time you find it, you've already missed the trade? A stock like this today, already missed it. It's already too far from a stop loss, too much risk in the trade. We've missed the trade. What I actually do is I look for stocks that are setting up and I place alerts on the trade. Okay, this pink line on all of my charts you'll see is an alert. And the reason that alert is there is because I see the potential trade setting up ahead of time and I wait for the entry into the position. Okay. Now, when I set up a trade, it's really pretty darn simple. First thing I'm going to do is Allstate. I know this is a pretty good stock. By the way, I don't scan. I don't look at every stock in the universe out there. I can't trade every stock in the universe. The only, excuse me, the only stocks I'm interested in are those that have good quality options. And so I keep those on a watch list and I follow those stocks. And I'm looking for those stocks that are setting up my price pattern. And my price patterns are very, very simple, guys. I trade two patterns. I've built an entire career trading two patterns. First requirement, stock must be in a trend. The stock moves up, pulls back, and a buyer comes in. Buyers step in, get a bullish candle of some kind. We call this a PBO, or a pullback opportunity. Okay? First off, am I improving my odds of a potential win of a trade because I am following a trend? Yes or no? Yes. And if I'm putting together a trade where I'm buying at or near price support, okay, at or near price support, am I putting together the lowest risk entry trade for that position entry? I always think about this. What is the best way for me to exploit the price action of this chart? Isn't it true? A lot of folks, maybe some folks listening right now, have been in trades where they waited too long. They wanted so much evidence that the stock was moving higher, they ended up buying it just before it pulls back. Anybody have that problem? Buying at resistance. I know a lot of folks are looking at this chart right here and saying, now, wait a minute. How can you buy that trade? How can you buy that trade? Can't you see this as price resistance? I can. I can see that that's price resistance. Okay. But I can also see that this is a trend. And are we not responding to the trend and responding to price support in the chart? When I have trend and price support and buyers stepping in, this is about the lowest risk entry I can get into the trade. And the reason I say that, guys, is because my stop loss goes right underneath here. Now, I can't guarantee this is going to be a winning trade. But what I can do from the beginning of the trade, know exactly how much I'm putting at risk. And I can calculate this and say that's acceptable or not acceptable. So I'm never overexposing myself on a trade, and I'm looking for those nice, simple entries into an already existing trend. Okay, is this making some sense, guys? So we're looking for those trades with those low risk entry points. We're looking for those trades that have good quality setups. We want concise price action. And when I say concise price action, I don't want to see a stock that's got wicks and tails all over the place and it's flying with great big giant candles to the upside and reversing and flying all the way back down. I don't even bother looking at those stocks. Think about that, guys. If we have very highly volatile stocks, are we increasing or decreasing our chances of a win on the trade? That's right. We're going to be decreasing our chances of a win on a trade. So we need to necessarily, if we want to be consistent in our trading, if we want to follow a plan, we need to avoid those stocks that are whipping all over the place, where the price action is confusing and messy. Stay away from those trades. So the first pattern, like I mentioned, was what we call the PBO. The stock moves up, pulls back, finds buyers. I'm looking for an entry into that trade. The second pattern I look for is the stock moves up and consolidates over to trend, and I'm looking for buyers ready to push it on through to the next level. Okay? And by the way, guys, you can see that pattern all over the place. We break this downtrend. You can see I have it marked here. Break this downtrend. We prove that we're going to hold this downtrend because we push up, consolidate over. Anybody see the buy signal here right off the trend? Right there. This has a stop loss that's just below that area right there. A low risk entry into the trade. We can actually set an alert on this position and wait for that trade to occur. Not chase it. Wait for that trade to come to us. And we can repeat that process over and over and over in trending stocks. Okay? Let me show you an example of even a high implied volatility stock, how it worked. Everyone from hit and run candlesticks, and well, right way options anyway, knows that right here, this day, the stock popped up. We were getting close to the trend in here. We'd broken through this resistance. We were consolidating this move, and I placed an entry into trade. I sent an alert out to everyone to buy that position. Took 3 more days to rest and consolidate over to the trend. Pop. Easy winning trade. There's that consolidation over to trend. The next entry into this trade, guys, stock moved up. Nice controlled pullback. This is a high implied volatility stock, but look at how concise the price action is here. We bought the pullback opportunity here into that trade. Long story short, I made $20,000 on those 2 entries. Tammy, about 70% of my trades are winners. And I've maintained that consistency for years because I'm extremely picky about the trades I take. Okay? I need trend. I need concise price action. By the way, there's no trade over here in this downtrend until the same pattern occurs. The same pattern is we break the downtrend, we hold it as support. There's the buyers. Winning trade. Excuse me, winning trade. Now take a look right here, guys. NIO pulling back to this price support. You guys think, look at our current trend. Do you guys think there's an opportunity here? If this chart rests right through here, it may rest 2 or 3 days. It may rest for 2 weeks. I don't know. That we could extend this move onto the upside. Yeah. And all I have to do is wait for it. My losing trades are very small, Tammy, because I calculate, I never take more risk than my tolerance for risk. I'm always buying low risk entry trades. I never take big risk on a trade. Anyone from Right Way Options will tell you that when I look at a stock like tech, and people will ask about this all the time, Doug, is this a trade? How many of you are going to take a risk on this trade of buying this entry here today with your stop loss having to be down here? But isn't it true? There's a lot of us that do that. We buy this here and we actually place our stop losses a lot closer. That stock pulls back from here. Remember that problem I mentioned? You buy the stock almost immediately, it pulls back. That's a symptom of buying at or near price resistance rather than at or near price support. Okay? So think about that, guys. When people ask me about this trade today, everyone in Right Way Options heard this. Great chart, beautiful chart, wait for the next entry. We've already missed it. The trade has already moved too much. This is where we should be taking some profits, not entering into the trade. Okay? And from this, all I have to do is find a trending chart and wait for the next entry into the trades. You guys can see the patterns here. Break the downtrend. What do? Look for the next entry into the trade. Can you guys see these trades laying themselves out? You find a good, clean trending chart, and you can trade that trade over and over and over and over. Just following the same trends. And you can see what I do right here, guys. I actually do exactly what I say. This is my list. These are trades that I alerted today. ABBV. I'm waiting for this stock to show me proof that we can break through. And I'm in no rush. Because if I look at this current trend, it's entirely possible this could chop its way over here to trend. I'm going to wait for that trade to occur to enter that position. Okay? The same way this did here. And I want to show you this, guys. This happens a lot anymore. We pop up big. We get a little pullback. A buy signal pops in there. You guys have probably been caught on this multiple times. It's as if the market makers have got this figured out. They pop a buy signal in there, and then we either continue to consolidate or we even pull back and finish up moving back to the trend. The way you resolve that problem is stop chasing. Just place a price alert in there and wait for the trade. The closer and closer we get to the trend, the better trade setup we have. Okay, notice right in here when I marked this trend on this chart, how it clearly defined the next entry into the trade right here. It wasn't even difficult to find. Okay, so we can actually plan our trades ahead of time to enter these positions without taking tremendous risk on the trade and set ourselves on the path of winning more trades and being more consistent in our trading. And by the way, guys, this works on weekly charts. This works on intraday charts. I traded futures full time for 4 years, made money doing that, made good money. I hate day trading. And I actually traded a 333 tick chart on the Dow E-mini futures. This same strategy works. I do the same thing every time I trade, no matter the time frame. It's the same price pattern. Here's a trade on a weekly chart. Oops. There's my entry right there. Let me pull this back and show you the same thing. Break the downtrend. Hold it as support. Buyer step in, and I'm still holding this trade, guys. I'm currently up on this trade $75,000. I do the same thing, the same patterns over and over and over again. Okay, I repeat these trades. Jenny, right here. 2017, right there, that green arrow. That's where I entered Walmart. And by the way, guys, this isn't odd. That's It's not abnormal. This was an entry into BDX. There was my entry. That was in 2013. I held this all the way over from 80 bucks to 220 bucks, trading a weekly chart, just following the trend. I do the same thing over and over and over, and it doesn't matter the time frame. I follow the same patterns, the same trending charts, and repeat this over and over and over. Okay? Now, when it comes to taking profits, if you're doing short-term trades, let's say you look at this chart right here, BDX on the daily, see that we broke out here, see that we moved up. You look for that pullback opportunity, either this candle or this candle for a potential entry. And you look at that chart and you see the price resistance up here. Should you be taking profits as it's moving up into that resistance? I have become very, very comfortable with taking profits. Okay? And the way I do that is by knowing what I'm trying to achieve in the trade, by having a goal. So for example, if my goal is a certain dollar amount and I reach that dollar amount right in here, everyone in Right Way Options will tell you, I will often just close the trade. I made my goal. I put the money in my account. My week has been made. Everything from this point on, I'm going to be as picky as I can possibly be and just add some gravy to it. Is this making sense, guys? It's just a wash and repeat process. And honestly, it's not that hard to do. Okay? It's not that hard to do. I see people all the time that, well, even in the Right Way Options room, they will say, what should I do with this trade? And it's a stock that's moved up big. Okay? Stock that popped and moved up big. What should I do with this trade? Take, for example, GILD. If anyone here from Right Way Options will confirm this for me, I told everyone about this trade, breaking the downtrend, holding this level of support, to be watching this in here. Okay, now here's the thing. Somebody asked me today, what should I do? You guys know what my answer was, right? Take profits. When a stock moves like that, we've got to expect a pretty substantial pullback. Take the profit. You've got to get comfortable with taking profits consistently if you're going to make a consistent living in trading rather than yo-yoing your account back and forth. Okay? Now, that is if you set this up as a short-term trade. If you set this up as a long-term hold, what's the next step? If you're going to hold this for a period of time and we get a move like this, everyone in Right Way Options knows my next thing, if I'm planning to hold this, is I'm selling short calls out of the money. I'm taking advantage of the implied volatility move on that change to pick up some premium and hedge the position. Okay. For an example, I own space. I own space with January 2022 contracts. Right now, I'm up 150% on space. When the stock gapped up big the other day, I did exactly what I said. I sold out of the money calls against that trade. And if I'd have closed those out of money trades today, I was up 25% on those out of money short calls because I took advantage of the implied volatility pop in space. Okay. But if I were trading this on the short term and I get a gap like that, It's something that we repeat over and over and over in hit and run candlesticks and right way options. Gaps are gifts. Take the profit. Take the profit. Let me ask you guys, how many of you have ever got a stock and man, that thing popped up like that? And then you become fixated on that stock. In fact, the only thing you end up getting done the whole day is watching that stock wiggle around. Anybody ever done that? You're trying to squeeze every penny out of that trade and you waste your entire day watching that thing wiggle around. How many of you would admit that if you had just taken the profit first thing in the morning, you probably would have ended up with a better trade? Isn't it true we will sit there and agonize over that all day, missing trades going past us all day long while we're waiting on that chart and we're wasting our time? No business can survive with that kind of inefficiency. When the stock moves like that for you in a short-term trade, close it. Take the profit. You've done your job. Pat yourself on the back. And now get back out there and find the next trade. Okay? Tuck that money away. And by the way, the money's not ours until we take it, right? Not ours until we take it. So questions that I get asked all the time is with an option, let's say we're looking at, this is another trade possibly setting up. You guys see how we've consolidated this move here, consolidated, popped up, pulled back, and all I'm doing is waiting for the entry signal. Right here's my price alert on the chart. I'm waiting for buyers to step in to prove themselves. I don't anticipate the trade. I make the trade come to me. Okay, so if I'm planning a trade on this, I always set my stop loss based on the price action of the chart. So that means if a buy signal comes in here, if I get buyers to step up, and just a second here, guys, let me get the right tool. If I get buyers to step up in here, does it make sense that my stop loss is underneath that low here? That's my lowest risk entry on this trade. Okay, we're reacting to price support and trend. That's where I want to enter and place my stop loss. And I can calculate this trade to that stop loss and decide ahead of time if this is an acceptable trade or not. Is the risk okay, or is it too much risk? Okay. I set my stop losses as conditional orders. Okay. So there would be an order in here on the market to close this option trade if the stock itself fell below a specific price. Okay. Now I use Thinkorswim. I also use a brokerage called TradeHawk, and they don't have conditional orders. So most of my option trading is done through Thinkorswim, where I have a conditional order, where I can buy a stock and place an order and saying, if the stock falls below this price, close this option trade. Now, at the same time, when I'm putting this together, if that entry comes in, I'm going to actually take a look at this aspect as well. If I enter here and put my stop loss here, I can measure my risk, right? And at the same time, I can look out here and see my next resistance level in the chart and determine whether or not this risk is worth this potential reward. If I can make the kind of dollars that I need to make on this trade. Can you guys see that what I do here is not just winging it? I'm not just throwing money at the market and hoping. I'm actually preparing for my success ahead of time. I'm planning my trades ahead of time, preparing to be successful. And I'm very picky about my trades. Anyone here from Right Way Options will tell you I'm extremely picky about my trades. Because I'm picky, it's one of the reasons I've maintained such a high winning ratio. You guys getting some good out of this? You finding some help in here? A way that you can actually craft your trading that makes things mechanical. It's no longer emotional. Okay? We're not just winging it in the market. We actually have a business plan that we're following. We're taking calculated risk. We have to be willing to take risk if we're going to be traders. We take calculated risk with high probability setups for a win. There's no guessing here. If I look at a chart and it's kind of ambiguous, if it's kind of, well, I'm not sure, you're going to find me pass on that trade every time. Not going to trade that trade. Okay? It's got to set up. It either is a trade or it's not a trade. It's black and white for me. There's very little gray in my trading. Okay? So I spend my day alerting to potential trades. CGC. CGC, you can see we're moving up in a trend. And we're just finally getting this little resting pullback. You guys think if there's an opportunity here, if buyers were to step up here off of this trend, next day or two, 3 days, whatever, buyers step off this trend, does anybody want to be in that trade? Holding trend, holding price support. I can't tell you if that trade's going to win, but I can tell you that that's a relatively low risk entry into the trade. Okay? We find our entry, we look for our target, and we plan our trades. We can do it ahead of time. Okay? Pull this back. Let me show you how simple this really is. When you draw that trend line on there, does this trade just pop out as you as a simple, easy trade? Stock pops, works itself back over to trend. We set an alert, wait for the entry into the trade. And it's just a repeating process that we do over and over and over again. I size my trade by the size of my account that I'm trading, Tammy. So for options trading, let me tell you my rules on that. I actually do a class on this for folks. It's called the 3-8 Trap class. As a matter of fact, I taught the 3-8 Trap class 16 times last year. And I've yet to have one person come back and say that strategy was terrible. It didn't do anything for me. People, it has changed their life, and it's just a simple strategy like this. Okay? But one of the first things we begin with in that class is you got to know who you are as a trader. You've got to have a plan. So the plan for sizing of trades, I usually tell people take the size of your account. Let's say I use that $30,000 as an example. $30,000, take it times 3%, make it times 4%. Okay? This is going to be $900. This is going to be $1,200. Your trade size should stay in that range. What I do is I find that trade size. If this were me, I'd probably say I just use the round number of 1,000. Okay. And every trade would be sized as close to $1,000 as I can, and it'll go right here in my trade plan every single week to remind me what I'm here to do. By the way, this sits on my desk every week. At the end of every week, I 3-hole punch this and I put it in a binder because I track my trading results. Okay? It's right here. And I follow that plan every single week. So I size my trades by a mechanical system. I plan my trades by a mechanical system. I take profits in my trades by a mechanical system. And I repeat that process over and over and over. And what I've said, and you can ask anybody in Right Way Options. Anybody here in Right Way Options can tell everybody that unless I get one of these two patterns in a trend, I'm probably not trading them. I have worked for 20 years to be the very best trader I can be at these two simple patterns, and I just repeat them over and over and over. How much you're willing to lose, remember, goes back to that tolerance for risk, Tammy, and everybody's going to have a different risk tolerance. Okay? And I gave you the example, the $30,000. If, let's say we could, at $30,000, we say we can risk $200 per trade, and we're willing to hold 5 trades at a time, maximum. That means what we're actually saying here is on that really bad day that happens in the market, if we lose $1,000 all on the same day, we're okay with that. I got a $30,000 account. I lose $1,000. I have 29,000 left. I can still recover. It sucks. I hate it. But if you guys have traded very long, you all know we have days like that. That big market reversal that comes, and all of a sudden, all of your trades stop out. So we have to plan for that. Now, what this also tells me, if this is acceptable, Jenny or Tammy, if this is acceptable, and I agree that I can do this, it also tells me when I'm over trading. If I have 6 trades on, I'm out of balance. I'm not comfortable with that much risk. That means I either have to close a trade that's a loser or take a profit on a trade before I add my next position. Okay. Currently, Jenny, yes, I do. Of all of my trading capital now, I'm going to be 59 this summer, guys. And of all of my trading capital, I have 80% of my capital in more passive, longer term holds. 20% of my capital is what I use for the higher risk trading of options. Now, that used to be a lot different. As I get older, this number over here gets smaller and smaller. Okay? But I take this count and I do that math the same way. Yep. I take 3% of my 20%, and that sets 3 to 4%, and that sets my risk size for my option trading and my higher risk trading. Okay? By the way, I call this stay rich money. I call this get rich money. And every year at the end of the year, I'm always taking capital from this to keep this balance at 80-20. Price action, Jenny. Price action, price action, price action. I say this over and over, price is king. Okay? Price is king. So we move our stop losses as soon as it's acceptable to move that stop loss, or when, isn't it true, guys, that a lot of people are struggling with where their stop loss is, when they really probably should just be taking the profit. And everybody agree with that? If the trade works for us and we're up, we're struggling with where to put the stop loss in when we really should be thinking about, you know what, I made my goal, close the trade. Give yourself a break, make the money. Close the trade. Okay? If you guys go on to my YouTube channel, there's a class out there called Base Hits, the power of base hits. And what I do is I work, even though that I've been doing this for years and years and years, and I have a solid size, I trade a big account. Okay. I worked a lot of years to get it there. But what I do is the same thing. Over and over, the thing that grew my account to that place, I just have bigger trade sizes. Okay? Does that make some sense? As your account grows, we just look to make those trades a little bit bigger. So for example, we enter a trade in here. If you have a small account, you start with one contract, right? But isn't it the exact same trade if you're trading a giant account? You just add more contracts. It's still 3 to 4% of your account. It's just a bigger trade. In my options trading account, it would be pretty rare, Jenny, if I had more than half. I really can't. If I follow my rules, I'm rarely going to have more than half of my trading account in the market all at one time. I have to be extremely confident to be holding that many trades. Okay. Now, in my longer term account, it's commonly very, very full. Okay. But these are trades that I'm holding over a period of time. I'm hedging them with options and all those kind of things. So those quick in and out trades, I'm in it for the short move. I get in it, I get out of it. I get in it, I get out of it. And I just repeat that process over and over and over. Can anyone see the possibility just looking at this chart? You guys see what I'm seeing here? How many of you think we could place a price alert right in here and wait for that next buy signal to pop? Isn't that identical to what occurred here? We broke through resistance, and we found that move up. It's the same trade, just a little bit higher. So just place a price alert on that chart and wait for the trade. Make the trade come to you. And it doesn't matter if it's been up a ways, doesn't matter, or if it's down at the bottom. Place a price alert, break the downtrend, rally up. We're finding price support and trend right here. I'm waiting for the entry signal into that trade. Karen, if that hasn't changed, your screen is stuck. Go up to the top right. You see those two arrows kind of in a circle. Click on that. It'll refresh and re-enter the room, and that'll clear up that problem. Your browser's gotten stuck. Okay. So it's the same pattern, the same thing over and over, and I'm just waiting for those trades to occur. I do the same thing on longer term. I'm watching Altria right now. This is a weekly chart. There's that big downtrend. We're trying to make that higher low here. Can you see I'm just waiting for that possibility that this is going to pop through? You're welcome. If you look at this chart right up here, this pays a dividend yield of over 8.37%. If I can pick this up for a longer term hold and have this stock maybe just come back into the middle, a reversion to the mean, come back in the middle. Does anyone have any problem with a 20, 30 point move? Just holding a stock like that? Or holding it as a long-term option? I play weekly charts the exact same way that I play the short-term trades. Just looking for those entry trades and follow them up. Any questions with any of this, guys? And I really hope you're getting something out of this. I don't want to keep you here all night. We've already gone an hour, but I'm willing to stay. If you guys have questions, if you found something here that you're really trying to dig into, I'm telling you guys, the people that I've worked with in private coaching and people that I work with day after day in hit and run candlesticks and right way options have seen massive changes by following a strict set of rules. Something that governs their emotion, takes the trade from being emotional to just a business decision. Can you guys see the difference there? It all depends, Mo. For something like this, I might do this as a combo trade. For example, I might buy the stock in my long-term account and then buy maybe a leap option on Mo and trade against it with short-term options for a directional trade. But I trade a lot of credit spreads as well. Okay, so a credit's just something simple where we're looking for that, that 1 month premium profit in the trade. The majority of my trading, though, is going to be directional long calls and long puts. That's going to be the majority of my trading. I taught this to Rick Sadler. You guys know Rick Sadler? I know HRC folks do. A couple years ago, Rick Sadler came to me and wanted to learn options. He'd never traded options. He'd traded for 30 years. He's a very good chart reader. 2 years ago, he started trading long calls and long puts only. He does no spreads. He opened an account. His first account he opened up in option trading, opened it up for like $5,100. He traded that up to, was it $98,000, guys? Something like that. You guys can actually go onto the website. He posts his statements. And all he does is trade long calls and long puts. As a matter of fact, he doesn't know how to trade a spread, and he doesn't ever want to trade one. He just trades long calls and long puts. And honestly, 99% of his trading is just long calls. And he does it every day. The same thing. And where's he at now? He opened another account. What did he start it with? $10,000 a few months ago. He calls it his road to wealth, and he's been talking about it quite a bit. I think he started it with 10,000. Isn't he getting close to 30,000 with that account now in a few months? Trading long calls and long puts, trading a simple strategy. You'll often hear Rick, when he makes a trade, closed it for 11.5% base hit. He's out. Took the money. That's how he's doing it. He's holding on to that consistency of a win because he takes the profit. He gives himself permission to take the profit. Okay. How do I deal with the theta decay of long calls and long puts? I sell calls against them. Okay, so for example, my space position is a January 2022 20 strike call. I'm up 150% on the trade because I've sold call strikes against this trade, short strikes against this trade, and I'm collecting profits on that. I'm offsetting the theta decay with a short-term option decay by selling calls against it, like a covered call, just using a longer-term option. Okay, I do that all the time. I'm up 150%. As a matter of fact, on the short calls that I have on this trade, since this big pop, let's go to the daily, since this big move on the daily, so 3 trading days, I'm up 25% on my short calls. I could close those today and make 25%. Okay. Yeah, like a calendar. Yes, like a calendar. $25 on the short call trade. Okay, just the short call trade. I'm up 150% on the overall position. Okay. The short call is a short strike that I sold against it. It has decayed enough because of the implied volatility change that I'm up 25% in 3 trading days on that position. Okay, so it is on that short strike position. Okay. So I could close that right now and take that profit and then just wait for the next entry and sell another short strike against it. By the way, guys, I teach this stuff every single day in Right Way Options. Okay. Every day in Right Way Options, I come on the mic. I'm on at the market open. We go through the market setup, everything that's in there, things that are happening, charts that may be popping and alerting. Okay. One that I mentioned this morning. Let's see, where was CVS? Was it CVS? CVS popped an alert this morning, pushed on up and pulled back. Another one. Oh, pizza. PZZA. PZZA was actually in my morning prep report this morning. If you guys go to the Right Way Options YouTube channel, subscribe over there, you'll and watch the video for today. I mentioned the video. This was before the market opened, that this trade was setting up, and there's the move right there. Okay. So it's the same pattern too, isn't it? It's the exact same thing that we talk about. Just stretch this trend on up. Notice that we were just chopping our way over here toward the trend, pop, and we follow through. I tend to keep a rather large watch list, Tammy, but let me explain that. I maintain a watch list of usually somewhere around 300 stocks. Okay. But the only reason I do that is because I'm actually looking for trades for all the members of Right Way Options. And not everybody trades exactly the way I trade. Okay. I don't really need that many stocks, but I like to provide lots of opportunity for the folks in Right Way that might be looking for a trade. Okay. So I maintain a larger list than I'd really recommend most people need. All right. You can certainly work with a relatively small watch list and make really good money in it. For example, year before last, just trading Coca-Cola, a real simple stock, an old boring stock like Coke. At the end of the year, just trading in and out, long calls. That's all I traded on it for the year. Just long calls, in and out. I'd made $25,000 just on Coca-Cola. Trading the same chart over and over and over again. Okay, so I really don't need lots and lots of stocks to follow, because I can follow a reasonable group of stocks like FCX. FCX is something we've been trading in and out of RWO. Just follow the trend and repeat the trade. Okay. You can do it over and over and over again. Would you guys agree this is a relatively simple chart to trade? Very concise price action, not a lot of whippiness, no wicks or tails, not really jumping all over the place. This is just a steady trender. This is money in the bank, guys. Wash, rinse, and repeat. Just keep trading this chart until the trend ends. Stock in my watch list has several criteria it has to pass. If it's in my options trading watch list, it has to have good options. I'm not going to waste my time. How many times have you guys seen a great chart and then you go look for the options and find out it doesn't even trade options and you just wasted your time? So every chart in my list, I make sure trades options, and not only trades options, but typically has very good option volume. Okay. I eliminate everything from my watch list, for my personal watch list, everything from my watch list that's highly volatile. Got big whipping candles. One of the things I don't do is I don't trade any biotechs. Okay. Because they're highly volatile. You can win and win and win, and then one trade takes all the profit away that you've ever made in biotechs when they have a bad report. I don't trade them. Okay, so I eliminate those. I eliminate stocks that I don't want to trade. For example, how many of you in this room are really going to be trading a lot of Amazon? Probably not, right? I eliminate stocks that are really, really cheap. Okay. Usually I'm not looking at any stocks unless they're 15, 20 bucks minimum, particularly for an option list. So I eliminate the top end, I eliminate the bottom end. I make sure that they have good quality options, and I make sure they're trading with a reasonable open interest. There's no point in me trading an option trade and just be trading against the market maker. Okay. You're rarely going to win if you're trading an illiquid product. So those stocks get kicked out of my list. All right. And then what I do, honestly, at the end of every week, I'm always refining my list all during the week. It's what I do. That's the biggest part of my job, I think, during the day as a trader, is to continue to refine that list, continue to maintain the quality of that list. Okay. I load it into what we call the LTA scanner. This is a piece of software. If you guys want to learn something about this, go to the website, www.livetradingalerts.com. That's what LTA stands for, livetradingalerts.com. And I actually just load my optionable list into this, and I set up scans. And the scans automatically populate. I don't have to run a scan anymore. They run all the time automatically. They just pop up. They tell me that a setup is here for the trade. So I can tell you when I look at BAC, before I look at BAC, I have a possible setup coming. Okay. And I let the LTA scanner just bring the trades to me. Now, what I used to do is I used to run scans in my TC2000 and flip through a list of charts. I would flip through my entire list about 3 times a day. Okay, because I'm refining, I'm looking for trades. Okay, refining and looking for trades. And setting alerts. So what I do every morning, everybody sees me do this in Right Way Options. We're looking at charts, and I'm going through and I'm setting alerts. Okay, finding ABBV, setting an alert. Finding Allstate, setting an alert. Finding ATI, setting an alert. Okay. And I just go through and I just keep doing it. I wait for the trade to come to me, and all day long, that's my job, is to be looking for the next trade. And I don't want to waste time chasing around just everything in the market. Okay. Does that make sense, guys? Mark it up, wait for the trade. That's it. Mark it up, wait for the entry into the trade. And just do it over and over and over. Just keep repeating, finding the trade, marking it up, waiting for the entry. Find the trade, mark it up, wait for the entry. This alert could have triggered you into the trade at any time, chopped around for quite a bit of time, moving over to its trend, flat trend, before it went up. You're going to see this happens all the time. We just set those trades and wait for those positions to occur. Okay. Take a look at Etsy today. This was a trade that I didn't catch. Okay. Didn't catch this position, didn't have an alert on it. It's up 8.6% today. Not a chance in the world that I'm going to chase that entry into the trade. Too much risk to my stop. That's okay. There's still plenty of charts to trade, more trades than I could potentially have money for. I just wait for the next entry. EWR. Set up the trade, wait for the trade. Do the same thing, repeat it over and over and over. IBM, watching IBM right here. This entire line is an alert. Look at this consolidation here underneath. High consolidation underneath a major resistance level. I'm waiting for a trade. Now, I will tell you, this one will probably get spoiled. Probably won't happen because of this. It's going to report earnings on the 21st. Probably going to mess it up completely. And I'll just have to wait for the next entry into the trade. But that's what I do. I analyze the chart, analyze the price action, wait for the trade. You can just see them here. Trades that continue to fire, and I just keep repeating the same thing over and over and over until it fails. Make sense? Plan your trades, guys. I want to encourage everyone. Make sure you do your job as a trader. And it's not just to sit in front of a screen and watch tickers roll around and race around chasing stocks. If you want to be in business as a trader, get yourself a plan. Put yourself in control of your emotions, make it mechanical. And just follow those trades. Know who you are as a trader. One of the things that I find when I'm working with people in coaching all over the place, guys, is they typically don't even know who they are as a trader. They want to be a swing trader. They want to be an option trader. They want to be a long-term buy. They want to be a day trader, and they're hopping all over the place. That doesn't work. You have to specialize. Find your trading style and then stick with it. There's money to be made out there. The money is already there. Now build your plan so you can capture that money. Okay? Remember, the way we make money as traders is we have to be just a little bit better than the guy we're trading against. Okay? It's a zero-sum game as a trader. Somebody wins, somebody loses. What are you doing to put yourself or give yourself an advantage over that other trader in the market? Are you being mechanical, methodical, planning, thoughtful trading? That's what makes the difference. That's what will win the day for you. Okay? So I hope this was helpful for you guys. I really do. Oftentimes when I'm talking to a new group, I kind of avoid this kind of hard hitting class, but that's really kind of what Mary wanted me to do, is just get really direct on entries, setups, planning, building that plan, focusing in on what you do. Because I can tell you guys, I don't know if there's any RWO members in here right now that would say following this kind of trading has changed their trading. Taken them from unprofitable traders to profitable traders. Being diligent, thoughtful, focused, planned, prepared, and ready to trade. It makes all the difference in the world. The money is out there, guys. Build your plan and get committed to it, and you're going to find your trading improves. All right. ABU, thank you, sir. Thank you very much. Well, I don't know if it's a sir or not. Tammy, you're very, very welcome. Twinkie, it is recorded, but I wasn't planning on posting it anywhere. This was just meant for the Dallas AFTA group. Hey, Scott, you're welcome. Do me a favor, guys. If nothing else, go to my YouTube channel, the the Right Way Options YouTube channel. Let me show you. I think I've got a page open here with it. Let me give you, I've got a playlist. Do me a favor. Go to my YouTube channel. I'm not going to ask you to commit to any membership or do anything like that. Go to my YouTube channel. Watch the videos. I've gotten over 950 videos now on YouTube. Every single morning I put out a morning market prep video prior to the market open. Every day I go over stocks that could be setting up. Subscribe to my channel, guys. Stay connected with us. If we can help you, take your time making that decision. If we can help you, hey, we'd love to have you as a member. All right? But there's no pressure here. There's no hype. There's no gimmick. There's no games. It's just every day doing the job as a trader, working through the process. Okay? So connect over there on YouTube. There's no commitment. Just make sure you hit that subscribe button and click the bell icon, and that'll notify you. If every morning when I post a video, you get a notification when it's posted, so you can watch it. And if you get some information in here and go through the educational videos, like I said, there's a ton of them out there on YouTube. And by the way, I talk about this strategy if I use a setup called the 3-8 trap strategy. And I've got several videos out there on YouTube for short-term trading using options, position trading, the 3-8 trap. Check that out, guys. It's free, no commitment. And if you find that we can help you with your trading, we'd love to have you as a member. But I just want to say thanks to everyone from AFTA. Honestly, I want to see you guys successful as traders. It's a great business to be in. It's amazing what you can achieve. Last year was, I just blew away my goals phenomenally. 3-8 trap, right here. 3 simple indicators. Easy. And the only reason, by the way, the only reason I created this, guys, is because it was difficult for some people to just read a naked chart. All of my trading decisions come from here. Okay? So I created this to help other people see when the trade's setting up. Beautiful entry right there. Beautiful entry right here. They just set themselves up. Entry, entry, entry. And you can just repeat it over and over and over. Okay. And there's classes on the YouTube channel to give you an overview of that. It doesn't go into your planning or anything like that, but just showing you the strategy. Take a look at that. I can tell you that it's helping tons and tons of people. It may help you. Yep, just a 3 and the 8 EMA with something we call the trendinator. And that's really nothing more than the 17 EMA. Okay. Hey, you guys are welcome. Thanks for being here tonight. I truly appreciate it. I will get this recording as soon as I can. I'll get it kind of bundled up and rendered and get a link sent out to Mary so that you guys can have access to this if you want to watch it again. All right. Everyone, take care. Have a great evening. I want to wish you all of the best, and I will see all of you Right Way Options folks. I'll see you bright and early tomorrow morning for the morning market prep video. Take care, guys. Have a great day.